Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. First off, I want to thank all of you guys that stopped by for last night's coaching session. It's great having you guys there. I love the back and forth, um, all of the amount of time we can spend going over options, talking shop, talking the tape, talking trades. So really enjoy every couple of weeks the time we can spend together. So again, just wanted to thank you guys for stopping by yesterday afternoon. For those that missed it, be sure to check it out. It's on or it should be by the end of today up on T3's webpage under options in play. So if you did miss it, it should be the recorded version should be up. Check it out. I talked about what I think is super relevant to right now, which is hedges. So the lesson that we went over yesterday was about hedges, the proper option hedge ratio. So definitely check it out. So for today, what I'm going to talk about is tomorrow. So the Fed rate decision, FOMC day. This is really the last significant catalyst for several weeks now. This week obviously is the last full trading week until the second week of January. So not only is it busy in that regard, but also this is a very closely watched rate hike, and it seems just about everybody has an opinion, right? Recently, the rhetoric has been ratcheting up more for not raising, and it seems unlikely. So right now, Fed funds futures are still indicating, I believe, a greater than 75% chance that we get a quarter point raise tomorrow. Most of the commentary I've read says that probably the most significant market moving announcement tomorrow would be the dot plot for next year. So expectations in September were for 3. Now that's moving down to 2. So in the last few months, the hike plot has dropped about a third. So from 3 to 2, and really any language about forward rate rises or what their policy is going to be probably was really going to push the market around. And if you wanted any indication of how significant that could be, I don't know if you guys remember, but the day of Fed Powell speech back in what was it, the beginning, November 28th. So we were up about 500 points, I believe, in that session, and that was just that just had to do with his policy sounding more dovish than people were anticipating. So it is going to be significant on that front, right? Checking the spiders. So you have these midweek SPY contracts that expire tomorrow. Right now, the straddle's pricing in just about 490 for tomorrow. So that is the remainder of today, as of the time of this video, and then tomorrow. So more or less one session is 490, and that equals about what we saw going into the G20. Just to put things into perspective again. So they are expecting a monster move tomorrow. It might not live up to the magnitude, right? But the options have been eerily accurate, kind of gauging the size of these events. So just to give you an idea, the midweek SPY straddle that expires tomorrow afternoon. So tomorrow expiration, Wednesday expiration, is pricing in about 490. So just a little under 2%, right? Big move. Now, what else can you watch? So, well, in addition to SPY, obviously Qs, QQQ, DIA, that goes without saying. Treasuries, right? Treasuries have had a huge jump over the last couple weeks. Going into tomorrow, they don't have midweek expiration like the SPY, but for the week right now, the TLT straddle is going to run you about $1.25. So about a 1% move. It's at 119.60 right now. So they're looking for about a 1% move in the bonds. Most likely, most of that pricing probably has to do with tomorrow. So That's what you're looking at with treasuries. But I mean, what a significant move. And I mean, these types of moves tend to reverse. So whenever it has really sharp, quick moves, you can see over the past, it's tended to pull back, right? Dropped, bounced, rallied, pulled back, gap down, bounced. So, um, my gut says that the next significant move could be lower on this, but definitely something to keep an eye on. What else? Financials, right? So averages are going to move, rates will probably move, bonds are going to move, and banks. This sector has just been brutal, just absolutely destroyed in the last 2.5 weeks. So XLF might not be at its absolute low of the year, but it's going to be very close to it. So XLF, right? All sorts of big cap banks, the asset managers, the regionals, all just really struggling to find us. You can see this is the regionals KRE. So it's not just the bigs; it's the regionals too. So XLF tomorrow, excuse me, for this week. So this is Friday expiration. The XLF straddle is pricing in about 80 cents. So it's 24, say 3.5% move by the end of this week. Bank of America and J.P. Morgan were two of the ones that I've been watching. These have both really been beaten up, similar to the overall sector. And these are a couple of like the better names in the group though. So if banks do bounce, these could be two of like the top names. It's JP, Bank of America, maybe throw Citi in there. Goldman Sachs, obviously, is probably the worst, and I'd say Wells Fargo in terms of like the mega cap banks, maybe the weakest as well. Okay, what else you might want to keep an eye on tomorrow? Gold and silver, right? So silver, I haven't really done anything with. Gold, though, is, in my opinion, setting up very nicely. And there's been a lot of interesting, a lot of bullish bets have started to pick up in gold. So GLD, you can see, I drew some trends the other day. So you have this, right? And like a nice steady move higher here. So you have, basically a stock that is breaking out of pennant, has put in a higher high on the monthly chart, and now it's trying to work on a higher high just for the daily chart, right? So it's trying to take out the previous high from beginning of December. So there's been good action technically. There's been good action option wise. Gold GLD has seen some bullish bets pile up. So today was a longer dated bet out through January of next year. So not 2019, but 2020. GDX has seen some flow, and I particularly like the look of Nugget, right? Very similar, but you can see just now clearing October high, and it has like this like open pocket here, right? So, these might not respond exactly to tomorrow, but I like the overall action, and people, if they talk down, if they're particularly dovish, talk down the pace of rate hikes for next year, maybe people start to worry about inflation. Gold is already acting well technically. It might be the fire or the fuel needed to really light the fire here and get things going. So just an FYI, the GLD for this week, the GLD is pricing in, say, about $1.25. That's the straddle for Friday expiration. So lots to watch. Obviously shaping up for what could be a pretty crazy trading day tomorrow. I mean, if the spider options are any indication, we could be in for quite a move. So definitely get ready. Again, this will probably be the biggest catalyst remaining, maybe until the end of the first week of January. So January 4th, maybe the following week when you have the JP Morgan conference. So this is big. A lot of people are focused on this. Expect a lot of volume tomorrow, or at least more than what we've seen the last couple of days. So definitely get ready. So as always, love to hear from you guys. Questions, comments, pass them along. Hope you have a fantastic night, and best of luck trading tomorrow. Buckle up, right? Should see some good action. So I will talk to you all tomorrow.